Ciao everyone, thank you so much for all your questions and comments on our social media. As you know, once a month we're planning to post a video like this one on YouTube just to address some of your doubts. We don't want you to waste your time and days surfing around for an answer. So let's begin. Question number one, what is the current start on VAT rate in Italy and other reduced rates for specific goods or services? Well, as you already know, once that you buy goods and services here in Italy, you will suffer the VAT on top. It's a percentage, a fixed one. It goes between 10 or 4% up to 22%. The 22% is the average. Reduced rates, yes, for example, for food services, you can get a confirmation, okay, once you go to the pharmacy, you can get some stuff. Or, for example, when you get the bill at the restaurant, you will see the VAT that is just 10%. So for food in general, it's 10%. Hi Paolo, my question relates to the taxation for retiring foreign nationals who live in Italy using the ERV. We are intending to apply for one in the next 12 to 24 months, so we're not limited to stay in Italy for 180 or 90 days. I've read that once you stay longer than 180 days, you'll need to pay tax in Italy on foreign earnings and income. Is that correct? And if so, how is that calculated? A lovely question. I'm saying the reason why, because the 183 days is a very common topic that we see online. Actually, this number is taken from the Article 2 of our tax code, the TUIR. It says that if you spend more than 6 months in Italy, you're automatically considered a tax resident. It's an assumption, and this is very important to learn, because as an assumption, you can prove otherwise. In this case, if you stay longer, if you spend more than 6 months and 1 day in Italy, I have to confirm that you will have to recap and put everything in the Italian tax return, including the foreign earnings and income. I have no idea of what kind of earnings and income we're talking about, Andrew, so I have to give you an average overview. General case, you will apply the Italian rates on the gross number, and if there is an agreement in force, you can deduct all the taxes already paid in the other country. Please remember that here in Italy, we distinguish between personal income, where you can benefit from the credit, and passive income like dividends and capital gains. In the second case, more likely you will have to pay almost twice as much because we go on the flat rate of 26%. What is the tax treatment for rental income in Italy? And are there any deductions or exemptions available for property owners? It depends, because if you run your, let's say, your rental as a business owner, like registering to the VAT position and registering to the Chamber of Commerce, more likely you can deduct, you can write off a certain percentage of all the related expenses that you incur with your business. Flip side, if you put your place on Airbnb and Booking.com as an individual, you will pay taxes on the gross amount. And the tax treatment, well, it depends. Once again, you can choose between, as an individual, between a 21% or 10%, and it goes by the name of cedolare secca, a flat percentage, or you can pay the 23 to 43%, and this gives you the so-called tax capacity. So, for example, if you have deductible costs like, medical bills, educational cost, or home improvements, this gives you enough, tax capacity to write off all the deductions that I just listed. Next one. My question goes with the capital gains. If established tax residency in Italy in a 7% pensioners jurisdiction, does the 7% apply to my US-based capital gain? I would say that for once, the Italian Revenue Agency has been very clear about this. And they say that if you opt for the 7%, you will suffer or you will benefit from, it really depends, on a substitute tax of 7% on your foreign income. It could be passive income and personal income. So I could say yes. But please remember that in this case, you cannot benefit from any credit given for foreign taxes paid. So in other words, you will apply the 7% on top of any foreign taxes paid on the gross. So you'll pay actually twice as much. Are there any specific deductions or credits available for families or individuals in Italy, and what are the eligibility criteria for them? It's very easy, if you know the answer, of course. As long as you're a dependent relative, the main family member or the main family members can deduct all the expenses related to the kid or to the children. I'm talking about, for example, medical expenses, educational costs. So it's not just related to the age, it's much more related to the gross earned from the dependent relative. You will be very disappointed to find out that for all the expenses just named, there is a cap. So best case, you can write off like 19% of a certain amount of the, for example, medical cost or educational expenses incurred. And this means that if you use a private school, more likely you will lose a big chunk of money for the tax credit. Another question, what kind of taxes would I be looking at if we had a sizable retirement in the US and available house? I see a very long list of questions, so I will try my best to address once at a time. Retirement, well, it could be a lump sum, it could be a government pension, a private pension, an annuity, a 401k, RA, I have no idea. So I'm giving you just an average overview. More likely in Italy, you will pay the personal income tax, the 23 to 43%. You may have the privilege to deduct all the personal income taxes paid or withheld in the United States. Variable house, well, in this case, it's pretty straightforward. You will pay the wealth tax, the 0.76% on the property value. With a big if you haven't paid anything in your home country. If that happens, you can use that amounts paid, like the council tax or the property tax, as credit against the Italian taxes. What if my retirement is small and my boyfriend's is large? Same, considering that we're talking about a foreign source of income, more likely you cannot file your taxes jointly, so you go separate ways. Is there a benefit to not getting married? I'm married myself, so this really, caught me on the spot. I can tell you tax-wise, there is no tax benefit actually. And the taxes only apply if I spend more than 103 days in Italy in a year. What if I want to spend most of the year in Italy except for the summer? The broad direction is if you spend more than 6 months, you have to file your taxes in Italy. Of course, there is a tax agreement in force. Of course, you already know that it's plenty of exemptions, but the general rule is this: more than 6 months, you must file your taxes on the worldwide income basis. It really depends where the center of your life is, where your family members are. So I would discourage you to take the risk unless you're 100% sure that in case of audit, you can prove that the center of your life is abroad. And definitely you can reach us out and we can discuss about that, with deeper details. Hi Paolo, thank you for offering your videos. Well, you're very welcome. Thank you for watching. Question about estimating toolkit. I'm not a pensioner, will be working. Does my IRA and the 401k balances go into the investment balances, or do they only apply as a pensioner income once I retire? Very, very good question. I can give you a 9 on a 10 point for this. There is no straightforward answer. It really depends on the employer. It really depends on your whole tax history and tax case. Generally speaking, the majority of the IRAs and the 401ks that we see in this studio get taxed under the wealth tax. So you will pay per year the 0.2% on the balances, on the average balances, unless you can prove that you fit certain requirements to be exempt. So I'm sorry to confirm the word's assumption. How does Italy handle capital gains tax on investments, such as stocks, real estate, and others? Capital gain tax here in Italy goes into a different direction compared to the personal income tax. The capital gain tax generally is a flat percentage of 26%. Depending on the tax agreement in force, so depending on the source of the money, you could benefit from a 5 to 15% discount on the basis. So I might say that this is one rare case where actually you'd suffer almost twice as much the taxes in your home country and in Italy. Salve! Oh, I love this Italian introduction. I'm 60 years old and I have dual US Italian citizenship. How to move in Italy within 1 to 2 years? Will not work. I have 401k and savings account. Hope to purchase apartment in southern Italy and maybe in Sicily, which will allow me to take advantage of the 7% tax scheme. Okay, I'll stop now for a few seconds. There is no guarantee the 7% will be there in 2024 onwards, okay? So please do your due diligence and work on a plan B. I will use some of the 401k to buy, then use the rest in savings for living expenses. Once I'm 70, I will collect Social Security and use that for living expenses. Would appreciate if you could explain tax implication. Okay, let's stop now for a few seconds. It really depends if you're moving to a 7% or not. Assuming it's a 7%, you will pay 7% just on the money that you cash out. Period. No will tax to be paid. Also, should I get international bank account that I can access from the US and Italy, or would I need to move money from a US bank account to the Italian bank when I get there? All the Italian banks right now tuning in will hate me for what I'm about to say. Tax-wise, the Italian bank account is not mandatory. You can pay taxes even cash up to 5,000 or by using your credit card or your debit card. So you can definitely live without an Italian bank account. Definitely, on the other hand, it could facilitate your life a lot. Next question, is it true that there is a 5-year incentive program to ease you into Italian taxes as an expat, and you must pay taxes even when funds come from America? I will start from the last part of your question. Yes, once you become an Italian tax resident, we apply the worldwide basis principle. No exemptions, just few exemptions that I can name. So it doesn't matter where your money is coming from. You have to put everything into the Italian basket. I'm giving you this answer on, let me check the date, okay? It's October 2023. And today there is the 5 years incentive that goes by the name of Regime Impatriati. But only God knows what's going to happen in 2024. So let's say that if you become tax resident by the end of the year, maybe you can benefit from that, from the 5-year plus 5 years of renewal. Can you explain the basic income tax brackets in Italy for individuals, including the applicable rates? I might say that everything could change from January 1st onwards, so I will stick what it is right now. The basic income tax brackets are, the 4 from 23 to 43% into brackets. If you make more than 50,000 per year, you will pay on the difference on the part that it goes beyond the 50 grand, 43%. Hello, Paolo. Hope you can answer my question. Well, I don't know. We'll see. I just sold my family's home in Italy that was gifted to me about 20 years ago from my father with the stipulation that they will have the right to live there as long as they are alive. My father passed 10 years ago, but my mom lived in the house until about 1.5 years ago, when she was admitted to a nursing home. I didn't have to pay inheritance taxes in Italy since it was a gift. Other special taxes I need to pay in the US from capital gain amount I'm going to receive. I'm a dual citizen but reside in the US. For once, I can tell you that I don't have the answer. For a simple reason, because we manage Italian taxes from an international point of view. I can confirm you that if you're talking about capital gain tax or inheritance tax here in Italy and you own the property for more than 5 years, there is nothing to be paid. Can you explain the taxation rules for self-employed individuals or freelancers in Italy, including any unique consideration for this group? Love the topic, but time is not on my side, so I have to spend less word as possible. Self-employed individuals can benefit today from a huge discount of 70 or 90% off for 5 to 10 years if they make more than 85,000. And this can give you a very good reason to move to Italy right away. Or flip side, If you make less than 85,000, you can benefit from another tax regime that is called regime forfettario, where basically you pay a flat percentage of 5% on your gross minus a flat deduction given according to the activity code that you carried out. Any unique considerations? Well, yes. Once that you're planning to move to Italy and start a business, please count on these huge things on the table, running pro or against you. One is the social security. This could impact on a very huge way on the net you're receiving. A second is, please make good assumptions on the impact on expenses on your net profit, because depending on that, you may be choosing one on the other tax regime. Well, I hope you found this session useful enough to learn the basics of Italian taxes. If you have more questions, please comment below with this video and keep an eye on our social media. We are offering this opportunity every month. Thank you for watching this video and see you in the next one.